Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you are in the right place. First, we're going to knock out our standard disclaimer. All communications with Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. Alrighty then. I'm going to get over to, so we did a quick poll in the pre-market discussion period here, and the consensus amongst the team tonight was there are three main instruments that everybody would like to see and actively trades. Let's go over to screen one. This is the E-mini S&P futures. We do have quite a few people who are visiting or on free trials. So let me explain very quickly what you are looking at here. So here at Viper, we've been in business about 10 years, and we actively trade the futures markets. Of course, we have a live room. Most of you, of course, have come into the live room. And we have developed these indicators that we use to generate trade signals that, generally speaking, we take using the Object Trader tool. Most of you are familiar with that tool. It's a semi-automated strategy that resides in a panel that sits on the right-hand side of the chart. It looks somewhat similar to Chart Trader, but it has a ton more functionality, and it is automated once you set it and it takes off. The instruments we trade in the live room are ES, the Russell. When we did the pre-market questionnaire, nobody raised their hand on the Russell, so I don't know if anybody really even trades that, so we won't even cover it tonight. But we will cover the mini S&P futures. That's on all the equities are on the September contract. Gold, of course, is on the December contract. That's $10 a tick. ES is $50 a point, or $12.50 a tick. And then, of course, we have crude oil on the October contract. And the main indicators you see here are, of course, the colors of the background. You have green, red, and you have this transitional color here. Bar colors, blue, yellow, and red. The power meters, the four different trends on the chart. We have predictors, real-time support and resistance, and of course we have the alerts. Now what you do for the alerts is that when you can very clearly see that ES was in an uptrend. Now what I did was I changed, we normally trade 4 range charts. They are 4 tick bars. So we got away from time-based bars a long time ago. However, given the movement of ES, I like to trade a 2 range. It's a little faster. I get a little more detail around the turning points where we like to get in for trades. And the key to success in futures trading is really a combination of 2 things. Well, it's many different things. Of course, learning your tools, but and the entry types that you like. Tonight I'm going to focus on, this is the first of a 2-part series, mid-band trade entries. We're going to talk in detail about mid-band trade entries. I love mid-band entries. There is instances where it does not work, and I will show that. But I will go into detail, and let's start with ES right now. Let me explain the anatomy of a mid-band trade and why you would take it. What we want to do is you want to focus on what we call high probability trades. And a high probability trade is certain conditions have to be present. You can use different types of bars. You can use range bars. Hold on, stand by. Got the wrong bar type up here. Give me a second, please. Yeah, we use range bars. I think I had the wrong bar type. Let me fix that. A lot of people, you can use Renko bars. We have Object Trader Renko bars. There's all kind of different. We just, whatever you do, don't. It's our strong recommendation not to use minute-based bars. Yeah, let me show the range bars here. There's different types of Renko bars you can use. As long as it's a tick-based bar is really the key. Because what you find when you get into 5-minute bars and 3-minute and trading off of 30 with guidance with the 60 and all, we did all that for years, is that the time artificially distorts the price action. And so you don't get the clean swings that you're really looking for. So let me go back here and talk about this morning on ES. And let me start at the let me go back and go back. Let me go back a little bit here and set this discussion up. I'm here in California, so everything you see tonight is going to be in Pacific time. So here is midnight Pacific coming into today, this morning, the 5th. So just as justice to your local time frame. If you're on the East Coast, add 3 hours, etc. Okay. And overnight, you have what's called the Asian trading session. So in the late stages of the Asian trading session, which starts at 5 o'clock, so that's actually kicking off right now, until midnight, which is the beginning of the European trading session right here at this vertical line. I'm going to do a quick pop quiz for everybody. Make sure you're kind of awake and paying attention. So at the end of the Asian session, going into midnight, which is the beginning of the European trading session, what was the trend direction on ES? I'll just give you two choices. It's either U up or D down. So I'm referring to this area right circled by my cursor right here to the left of the chart. Was ES in an uptrend or a downtrend? Right in here. What was the trend of ES? Late part of Asian session, crossing the vertical line into the European session, into the early, say, first hour of that. Absolutely correct. Yes, the trend was down. So when we evaluate the trade entry type that we're going to take, it goes without saying, but I will state the obvious anyway, just so we're all on the same page on this, is the first step in determining your trade type is going to be to establish whether there is a trend or not. So you ask yourself, is there a trend present on the chart? If the answer is yes, then you have to determine, is it up? And generally speaking, in most cases, there are exceptions, and we'll talk about it, that you are primarily looking for long trades only. Or I should just say equals. Uptrend, generally speaking, equals long trades. So this is the first assessment you do of the chart. You look and see if there's a trend, right? I'm not going to say long trades only. I'm going to say primarily long trades. And of course, if the trend is down, you're primarily looking for short trades. So in the case of this area we talked about over here, characteristics of a downtrend are as follows. You would have the mid-band. Okay, so if I forgot to mention the mid-band, of course you can see the bands. We use the bands to trade. Four bands below, thick middle line mid-band, 4 bands above, that they will be stair-stepping down like such. Now this is important. Why is that important? Because there are instances where the mid-band and all the bands do not stair-step. Here's an example here. So when the mid-band is not stair-stepping, what does that mean? These are the first observations when you log in the morning and you load up all your charts, whatever you're going to trade for that day, and you have to look and see what the market's doing. Most times it's going to be doing one of these two things. Stair-stepping down, stair-stepping up, flat sideways mid-band. All the mid-bands are flat and sideways. This means that you're in consolidation. Now, that's not to say that a trend can't come out of this, which it obviously can. trends emerge from sideways. So let's look at over here. Here's an example where we had sideways towards the end of the trading session yesterday, evidenced by the fact that the bands are all flat and the mid-band's flat, so we're in sideways price action, also known as consolidation or chop. We'll talk about how to trade that in a minute. And then you go into a trend. And then generally speaking, unless you get a V top or V bottom, you will go into another period of consolidation, and then you'll break either up, down, downtrend continuation, or a reversal, and then the trend will resume to the upside. This is a really critical concept. And in order to really be successful at trading futures intraday like we do, you have to get this down pat. You have to really get good at seeing what the current trend is and determining what type of trade type you're going to take. Now, our alerts can help you. Let's look to the right here after about 2 o'clock, 2 hours into the European trading session last night. You can see that the mid-band and all the bands start to do what? Stair-stepping up. So the characteristics of an uptrend are green background, solid green background, predominantly blue bars, mid-band and all the bands stair-stepping up. You are said to be in an uptrend. Conversely, if the background is solid red, mid-band and all the bands are stair-stepping down, bars are predominantly red, this is called a downtrend. So let me just put it right on. And we know what type of trades we take. Here's an example on the left of the downtrend. Here's an example on the right of the beginning part of an uptrend. Now, so that's the first component of trade decision making. We determine if there is a trend, and if there is, what is it? Because that drives our decision making as far as what types of trades we take. Now, we are what you call retracement type traders. We take pullbacks or retracements in the trend. So what does that mean? When you have a trend and a trend begins, you have this notion of what's called thrust and retracement. That is the very basic building blocks of financial markets and when they are trending. So let's look at an example in this downtrend. Here we come out of the consolidation period and you get the first thrust down like such. What happens is, generally speaking, is that some kind of, when you go into a downtrend, a support level will be broken, and you get a push in the trend direction. In this case, it was down. Now, one of the things that you have to try to fight as you're developing your trading career is fighting the temptation to buy or sell a thrusting part of the move. Generally speaking, what will happen, it goes like this. You watch a market break. Could you have taken this trade? Well, if you had an object trade or region box here and you enabled both sides, sure, you can catch the first leg. Occasionally, you will catch the first leg of a trend. But truth be told, it's pretty rare. You normally have to wait for some kind of pullback. So in this case here, market breaks, it's going down, it's going down, it's going down, background turns red, so the mid-band, all bars are all red, and you are now convinced when it gets down here at the apex of the thrust down, it's time to get short. So you pull the trigger with a market order short, only to realize that the market starts pulling back against you. Quick show of hands, how many of you still do that? Market tanking, 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 tanking. You think, oh man, I better get on. This is the next 100-tick drop. I'm going to miss it. Old fear of missing out thing, FOMO, right? You pull the trigger at the apex of the push, only to be full stop out on a retracement. I don't see too many show of hands, so most of you are avoiding that. That's when you get into trading, learning how to trade trends, that's the first thing you have to fight. Now, you might say at the time it's happening in real time, Brian says, I don't do it anymore. I used to do that a long time ago. Well, that happens. It hurts and you have to watch for it, David. That's right. Once you get in and you start trading and you get popped with a couple of losses because you bought or sold the thrust move, you'll figure that out real quick. Yeah, it's a hard thing to learn, but clearly in the case of the downtrend, you can see that it is thrusting down, and so the retracement is in the other direction, which is up. Now, in a downtrend, I'm going to explain very quickly I'm going to cover this because I'm going to get into more advanced topics on Saturday morning, so you just need to learn the basics right now. In a downtrend, when a market comes above line 2, which is the thin red line on the top of band 2, and stealth, so there are two conditions for what we call a minimum criteria entry on the short side, and that is it right there. See how these bars breach up into this area and then roll over and continue their way down? A mid-band trade is defined as the band immediately above, and immediately below, and or on the mid-band itself. And a deep retracement in a downtrend or a phantom would be defined as coming up into this band right here, which is known as band 6, and that's line 6, the thin green line right there. So in a downtrend, those are the three types of trades. So in this thrusting move in the Asian session, did you get a mid-band trade? No. Did you get a minimum criteria trade by definition of the mid-band minimum criteria? Yes. Yes, you did right there. Now, when you enter that trade, you can box it in. You can put a limit order here. You can put a market order. There's all kind of different ways. We prefer the Object Trader tool because it puts in all the targets and stops and manages the trade for you. If you do that manually, you have to put your targets and stops. And then the trail stop generally is going to fall somewhere between the stealth line, this sort of little sneaky snake looking line right here that's called stealth, and line 2 in the case of the short. And so somewhere in all likelihood, if you took this short, you were a night owl and up taking it, you would have been stopped out somewhere in this area right here. So that was the trade. That was the short trade right there. It was not a mid-band one, it was a minimum criteria. All right, so then we go through this period of consolidation into the early stages of the European trading session, and now we get a thrust in the up direction right here. So when you go into an uptrend, it is defined by initially having a thrust or a push in the up direction. Notice how the mid-band and all the bands start stair-step up. Bars are predominantly blue. Background is solid green, and we are now what you call into an uptrend. So now what I'm going to do, now that you know sort of the basics, let's recreate the early stages of this European trading session together. And when you think you see a mid-band long trade, you simply type in the letter L. Okay, you ready to do it together? We're going to reconstruct what happened in real time together. I'm helping you out. You don't have to figure out what direction. We already know it's an uptrend, and we know you're getting long. So you're looking for mid-band trades. Are you ready? I'm going to advance the chart. We're going to start at 3:06 a.m. Pacific. Here we go. Remember, when you see what you think is a mid-band long trade, you type in the letter L. All right, here we go. Okay, now we're at 4 o'clock Pacific, 4 a.m. I see your question, Kevin. I'll circle back on that one. I will answer that question. Hold on. It's not moving. Did I pause the chart? Let's go back to 3 o'clock. I think I had paused the chart. Let me go back, reconstruct this. Sorry about that. Let me double check that I'm live here. Cursor moving to the right and left. Everybody's cursor moving right to left. Yes? Cursor moving? Okay. All right. Let's start over again. We're at 2:42 a.m. Pacific. We are 2 hours and 42 minutes into the European trading session, and clearly you can see that ES is heading up. We're looking for mid-band long trade entries together. Reconstructing real time, there's 3:30. That's the thing about ES. She's a slow creeper. Gotta have a lot of patience with ES. Take your Geritol meds and get ready to take it slow. Looking for long trades. Let me blow the Make the bars a little bit bigger here. They're kind of small. Can't even hardly see them. So your eyes are focused on the right-hand side of the chart. Our eyes are over here, looking for long trades as we define them. There's 4:50 a.m., 4:53 a.m. Trying to get long at the mid-band. 4:56, 4:58. You're typing in an L when you think you see it. Okay, once again, there's 4:51, 4:56, 4:58, 5 o'clock, 5:05, 5:06, 5:07, 5:09. All right. I'm going to pause it right there. Now, we got a lot of people in this room here tonight. And here again, now, you know, if you are new or you know, visiting, or you're seeing this for the first time, or you're on a free trial, you totally get a hall pass, because, you know, it's hard to see trade setups for something that you're just, you know, literally seeing for the first time. However, let me see how many people typed in L's. 1, 2, 3, 4, 5, 6, 7, 8. That's not very good. That's not a very good percentage. Now, let me explain the uptrend. Maybe that was the issue. If you recall, over here in the downtrending scenario, we defined the 3 trade types that we like to tape as a minimum criteria here in this band above line 2 and stealth, mid-band trade above or below in the band or directly on it, and the deep retracement here. Those are the 3 trade types in a short scenario. In the long scenario, it's the opposite. So in this case here, we have the thrust, and I didn't point it out, but there was a question earlier, and I'm going to answer your question, Kevin, was this a minimum criteria? And I'll ask the team to answer that. The minimum criteria is defined as breaking line 6 in an uptrend, and the stealth going into band 6. So by definition, is that a minimum criteria trade on ES, yes or no? Those bars right here. Is that meet the criteria of minimum criteria to be a long, bona fide long entry? The answer is yes. That's a good example of one. Sometimes the bars will go a little deeper down into here and kiss the top of that next band. Anywhere in here, as long as it's got to break through stealth and line 6 in the case of the uptrend. Now, in this case here, what happens is, you'll notice, and try not to get confused about this, that oftentimes in a trend, when the bars get close to the mid-band, they turn yellow. That does not mean a trend change by any stretch of the imagination. That simply just happens in the algorithm. Now, the long trade as defined by a mid-band would be on the mid-band itself, that's obvious, or entering the band above, directly above or below the mid-band. In the case of the deep retracement, you go into this band right here. These are the 3 long trade type entries. So they're located, technically speaking, is band location-wise and mid-band-wise in the same location as the short trades over here, right? They're all entering the same bands. Mid-band is the same, right? But the difference is that in the case of the downtrend, you're looking for kiss and roll short, right? So you're shorting in here. And conversely, on the long side, you are looking for retracements down. So here is the example that we're talking about. Coming out of the minimum criteria, here's your thrust. And when you're in an uptrend, the retracement is the pullback into support. So that's a textbook example of a mid-band long trade. Every single person in here tonight, in this webinar, when these bars formed right here, should have typed in the letter L. That's it. That's it. Just sort of burn this into your mind. These are extremely in a trending market. So this is really important. In fact, I'm going to put it right on the chart. Okay, I'm going to put it right on here so that we kind of burn it into our trading psyche, if you will. you have a high probability of success with, problem on my fingers to get, mid-band trades in a trend. Okay? High probability of success with mid-band trades in a trend. Why am I saying that? What the heck does that have to do with anything? Now, is this statement saying you have high probability mid-band trades in a consolidation, or when it's flat, or markets are choppy, or markets are sideways? So there are two components to this sentence that you need to really sort of, in fact, I'm going to highlight them. And this is really critical to your success. I'm going to put it in caps. Mid-band if you take anything away tonight, please remember this. And trend. High probability of success taking mid-band trades in a trend. So I highlighted the two components. So step one, we identify whether there is a trend, right? Step two, we locate where we're going to get in ahead of time. And it's going to be the mid-band. Now, I have illustrated other trades to you. I have shown you minimum criteria trade entry short and long. And we've talked about deep retracements. However, and those are all valid bona fide trade types. But I would suggest to you that in the early stages of learning this trading system, that you focus solely on mid-band trades because of their high probabilities and trends. Why are they high probabilities and trends? Why does the mid-band work so well? Anybody? Why do we say high probability? Any ideas why those work as good or better than any other trade type? Any ideas? Any ideas of why the mid-band trade is so successful in a trend? It's a retracement. Good. Because you're catching the big move. Yes. There's meat on the bone on the retrace. Perfect. Yes. Mario? Good. Those are all very valid answers. So what do we mean by meat on the bone? What's Mario talking about? Well, generally speaking, in most markets, and I'll just use this as an example, from the apex of the thrust in the uptrend to the support at the mid-band, and let's measure it right now. The distance between these two circles generally is going to be between 20 and 24 ticks. The apex of this move, let's keep it simple. Let's call it 66, 66.50-ish, 29.66.50. And it pulls all the way back here to 61 1/4. Let's call it 61.50 just for even numbers. That's 5 points times 4 ticks per point. So you're looking at between 20 to 22 to 24 ticks between the apex of a push and the support level at the mid-band. So when somebody says, you hear a comment in the live room or wherever you hear it, there's meat on the bone for that trade, that there's a strong likelihood in a trend that if you find support in and around the mid-band, that it's going to, at a minimum, get back to line 6 for a scalp trade, which on ES is going to be between 4 and 8 ticks, generally about 6 ticks. So if you get filled down here at, I don't know, 61, 62, and you get 64, there's your 8-tick scalp. This is extremely high probability. I'd put it up in the 80+% category of likelihood in a trend on ES. Furthermore, I would submit to you that there's a strong likelihood that it's going to go at least back to here. Now, that would be almost 20 ticks. And if it's a powerful uptrend, it will continue on to fresh swing highs. If you collectively as a team here just learned this one trade and you picked, say, maybe one or two instruments like ES and gold, ES and crude, crude and gold, those three sort of triad of trio of instruments, and just learn that trade alone, you will extremely high probability of making money every morning. Now, look, eventually you can circle back and add the repertoire of minimum criteria trade types, deep retracement trade types, minimum criteria shorts. You can round out your toolbox with those over time as you gain more experience. But if you want a foundation to build on, building blocks, this is my go-to trade every single morning. Every morning I take this trade on ES. Every morning. And I can't remember the last time I had a losing day. Now, I'm not being braggadocious about that. I'm not trying to put that in anybody's face. I'm just saying that this is an extremely high probability trade. And if you're going to want to make money in the morning, that's might probably want to be one of your go-to trades. Now, I'm going to do one more exercise here. Now that everybody has been informed about how that trade works, we're going to do one more exercise, and then we got to get over to gold, and we got to get over to crude. We're going to run out of time. And everybody wants to see gold and crude. Okay? All right. I'm going to advance this chart into the open of the market. And when you think you see what is considered a mid-band trade entry, you're going to type in the letter L again. Are you ready to proceed? Okay, I'm going to show, we're going to go up, and we're going to show the open of the market. And now you're going to look for mid-band trade entries. Is everybody ready? Okay, here we go. We're going to go into you're looking for mid-band longs on ES. Here we go. Okay, we're still at 6 o'clock. We're in the pre-market session. Gary's open, the room's been open about 10 minutes. Okay, about 10 minutes on the room open. Come on, chart, advance. There we go. 6:24. Equity markets open in 6 minutes. There's 6:30. There's the open of the equity market right there. Looking for mid-band longs. I'm continuing to advance, reconstructing the morning in real time on ES. Remember, when you see a mid-band long setup, you type in the letter L. There's 6:31, 6:34. We're 4 minutes in. Looking for longs. There's 6:36, 6 minutes into equity. $6.44. 6:45. Little buy algo kicking in there. See that? See a little kick up? It's buy algo. Buy programs. Big boys are pushing it higher from overnight, right? Okay. Get the bars real big here so everybody can see. Not say the bars were too small and you can't see it. Okay, now we're at 6:47, looking for mid-band long trade entries. The bars like super big here, make them really super big, so everybody's real clear on what's going on here. There's 6:46. There's 6:47. Okay, there's 6:48. Mid-band long entries, ES, trading 17, 18 minutes into the equity market open. All right, I'm going to stop it there. Now, how many of you were in the live room and recall that when I didn't say anything for probably the first 5 or 10 minutes of the market being open when I was in the room. I came in the room way over here. I had my charts open. I was watching all this going on. Okay, I couldn't get in. So there was a question. There was a couple questions in here, and to be fair to answer them, who asked this? Gene. I think it was Gene. Okay. There was a question or a comment observing the fact that these two retracements, as I showed them reconstructing real time, were those minimum criteria entries? And the answer is yes. Right, everybody see that? See those bars here and these bars here? And those turned out to be very nice scalps. I did not take them. I saw them. So did these meet the minimum criteria entry requirements? And the answer is yes. And they turned into be scalps. That was correct. But that's not our exercise. Our exercise was mid-band trade entries. Okay, right? In fact, this one here right at the open turned out to be a beautiful entry. Now, if you recall, about 10 minutes in on when this thrust occurred, I called out some numbers. I said if ES retraces anywhere down around the mid-band there, around 68 3/4, 69, and bounces, and as I recall, Gary put a line here somewhere. Remember that? Remember I said that? So let me just tell you how I'm looking at this. Let me tell you how I'm looking at this, because I made a lot of money off of this trade. This is what I do every single morning on this instrument. Every morning, this is what I do. So the market was up here. I didn't take these trades, so I wasn't in it. If I was in it, I'd be trailing stops right in here, right? But I didn't take it. So why did I say that? When the market is up here at 74 3/4, where is my eye looking for entry? Here. The market is here, and I am looking here. And I'm saying, and I said this, I said if it gets anywhere down here, I'm going to get long. That's why I said it, because this is where the retracement had to come, because this would have been somewhere around 20 to 24 ticks of retracement in this big move. The apex was 74 3/4, and the midband was at 68 3/4. That is a full 6 points times 4 is 24 ticks. So I knew that in this strong, powerful uptrend, that if I got a 20 to 24 tick retracement, that there was a strong likelihood I was going to get to here at 72, and I was going to go back to 75. This is the anticipation of looking ahead. That at the time, at 6:45 a.m. Pacific, 15 minutes into the trading session, this had not occurred. I'm looking ahead to beyond the right-hand side, and what I'm projecting out is saying is, if it comes into this sweet spot zone, I'm going to buy it. Can everybody, I want to just pause here for a second. Does everybody understand what we're doing here? So the reason I'm taking so much time to explain this to everybody is because if you can learn how to do this, you will be successful. I'm just guaranteeing it right here. I'm just going to say it. I'm going to say if you can learn in a trend on ES to take that trade, 9+ times out of 10, you're going to make money at it. If anything, a scalp. In the first like half hour to hour in a trend, you're going to make money on that trade. I'm telling you. All right, so let's see what this thing turned into. Does everybody understand how this works now? Okay, let me just take 1 second. I'm going to reconstruct it, and then we'll move on. So we're all on the same page here, right? So the market was coming up. We're watching it. We didn't get these. Okay, you didn't get them. You were waking up. You were half asleep and didn't have your coffee. You're petting your dog, whatever. You didn't get them. All right? But we know this is the uptrend, and this is the thrust. The thrust is up. You can't buy this. You cannot buy that. You're going to get creamed every time. Is that clear? I just hope that's crystal clear. I'm not mincing words here. You've got to wait for it to pull back, and it's got to come down into this area right here. And sure enough, I'll be darned. Now, here's the thing. Look, I understand it. When that thing is running away like that, like a big dog, I feel sick to my stomach. I'm a person. I'm not a robot. I feel sick that I missed the run, but I can't cry in my soup. I can't say, oh, well, I'm just going to write ES up there. Thing ran up 30 ticks and I missed it. Whatever. That was the trade of the morning. No. You pull back, you regroup, you say, okay, all right, cool. No problem. When you pull back, ES, I'm going to take you. And sure enough, look at that. It came right into the sweet spot right there. Bam. Bam. Right there. It did it. If you got to be patient for it, though. You got to wait for the retracements. And this is hard. A lot of trading is entrepreneurial. Many of the people are you're driven. You know, you get a type A personality, you want to jump in things, you're all excited in the morning, you know, maybe you're a little nervous, whatever. You got to relax. How long did this trade take to set up? Let me level set your expectations here, okay? This thing came and sat here, and sometimes it'll sit there for 5 minutes. The retracement started here. You know, I'll say, okay, 645 was the apex over here, and we start to retrace. There's 646. There's 647. We enter the sweet spot opportunity at 647. We dink around here till 648. So it had a full minute of sitting here. And we were calling it in the room, saying to buy it. I mean, I don't know how to make a trade any more clear than that. Anyway, okay, let's move on. So here's our scalp. And I said that. I took this trade. I said, look, this thing's going to hit 72, this little swing right here, and take your scalp off. I hope anybody in the room remembers this. I'm not making any of this up. This happened in real time, and I took this trade live with real money. Anyway, we proceed right here. What do we get? This is what our goal is when we get in. Bam. If you're in multiples, there's another place to peel. Now you're trailing your stop up. Yes? Everybody see it? Get your scalp. Our goal was to get to this apex. It does, and it continues on up very, very nicely. Let me show you what this trade turned into. Okay, stand by. Something weird on the chart. I think I got it. Okay, there we go. All right, we pull up, we break the swing, we pull back, we check support. Remember I was saying leave your stops a little bit loose. Remember I'm saying, so why do we have loose? Okay, let's talk, pause for a second, and let's talk about trail stops. All right, so what you want to do here is that once you get in this trade, whether you bought it at a market order, whether you had a limit order here, you drew a box and you were filled on to close that bar, however you got in here, you want to immediately, once you get that scalp off, so what the anatomy of the trade is that from your entry, wherever you got filled, object trader, let's say it's 10 or 12 ticks. So your initial stop is going to be down here somewhere. So let's talk about this and then we'll move on. Let's say hypothetically you're filled at 70.50, less 12 ticks is 12 is 3, 67. So actually it would put your stop way down here somewhere. But you don't need to do that. You want to take it right up below the swing, right? And then once you get your scalp off here, you take it within 2 ticks of your entry fill here, whatever you got left. Let's say you put 4 on and you took 1 off and you're trailing 3, right? Let's say you had 2 on and you peel 1 and you're trailing 1. You get it right up. Now you got the free trade. Now you want to follow with whatever you got left here. See the stealth in line 6? See how it's stair-stepping up and it wicks it like that? So when I'm calling out trail stops, what I'm doing, I'm just telling you straight up what I do. See the stealth line and see line 6? See how it's at 73 1/4? Now, if you had super tight stops here, right on stealth in line 6, it took you out here, the wick of that candle, and you missed the tail end of the trade. Look, it's kept going. Look. So in the beginning stages, you have to let a market sort of unfold a little bit. You got to let it wiggle around a little bit, right? And then as you start to get from, where do we get filled? 70 3/4. Let's use a round number, 70. And it's moving up, it's moving up, it's peaking out at 78. In fact, I was calling out numbers of targets. Do you remember that? Anybody? I said we're looking for 72, and then we were looking for 74, and then 76 and 78, and we were looking for 79. And sure enough, it nails 78 right on the button, pulls back, and we get stopped out right here. So overall, this thing was that 6 points, 20? No, was it 70? Where are we getting? 70 to 76. You could have gotten up out here a little bit. You crank the stops up when you get up around 20, 25, 30 ticks on ES. You really want to. You don't want loose. You don't want stops down here. You got to crank them up tight. So you made what? 5, 6 points times 4 is 20, 24 ticks. 250, $300 a lot. I had 4 lot on, so you can do the math. How many of these do you need in the morning to make your trading goal? Anybody? How many of these trade type setups do you need to make your trading goal for the whole morning? let's say you got the scalp off, you made, you made one bone there and you made another 3 bones over there, so you're up somewhere right around $400 less commission on a trade that lasted 15 minutes. One and done. That's exactly what that is. That's all you need to do every morning consistently. $300, $400, $500, one trade, less a little commission. What's commission? $4 a lot. That's your one and done right there. You can do that every morning. If you're in a trend and you wait for those mid-band pullbacks, you can do that every single morning. All right, look, we're almost out of time. Let me get, I know everybody wants to see crude. I'm not going to be able to give crude and gold justice, so I'm gonna try to briefly touch on them, but I'll go into full depth. I'll spend a half an hour on Saturday morning on crude and a half an morning on gold. So out of the two, let's take a vote. What do we want to see if we can squeak something in before we wrap? So just type in either GC or CL. And whatever the team votes, that's the chart I'll put up. I spent a lot of time on ES. I wanted to get a lot of detail in there because you get these every morning on ES, and if you just learn that one setup and execute it correctly, especially when it's trending, I'm telling you can bank some good coin. Wow, we got a good mix here. We got a lot of crude traders, and we got quite a few gold. Well, let me do this. I'm not going to do both justice. Let me see if I can get something a little bit on both, and I won't spend any time on ES on Saturday morning, okay? I'll go straight into crude and gold. So that between this two-part series here, you get the full Monty on both. Because I know Gary's pretty active on crude and gold. I'm more of an ES person. I'll catch a crude trade once in a while. I'll catch a gold trade if the perfect setup is there. So that's the way I do it. Okay, that's how I make decisions. Is I'm very patient and I'll wait for the right setup. There has to be a trend, right? There has to be a trend. That's the deal. That's my first criteria. If there's no trend, I'm not going to consider either one of them. Excuse me. Okay, now everybody understands the, now at 8 o'clock we had crude inventory, right? 8 o'clock we had crude inventory, so I can't really cover that because of the shotgun. So let me see if I can show what happened after the inventory came out, and then do a quick quiz on crude to see that if everybody is getting the program here. Okay, I'm going to start this exercise 45 minutes after the inventory had come out. And I'm going to help you again. I'm going to, for the entire team here, for the purpose of this exercise, I'm going to help you identify that you are going to be in a downtrend and that you're looking for mid-band shorts. Okay? So in this exercise, I'm going to advance the crude chart, and when you think you see mid-band short trades, you type in the letter S. Ready? I'll circle back on your question there, Gary. Let me do the exercise here. Some people had to take off here. Hey, listen, some people taking off. If you got other things to do, like a dinner appointment or whatever, family thing, this is recorded, and everybody will post it on the web, and we'll put it in the subscriber area. And so don't worry if you need to take off. I'll make sure that this gets rendered and up on the web. Gary can do it right after the room closes tomorrow morning. No, I'm showing you crude right now. Here we go. Oh, let me do a 4. Let me change the data to 4. I still have a 2. Sorry about that. I trade the ES with a 2. Let's get the 4 up here. Crude's a 4. Crude's a 4-bagger. 4-bagger on the good old crude here. So hold on, pause. I'm just going to load up the chart for our exercise. And here we go. I'm going to begin this exercise right here. I'm going to blow the chart up with some good, thick, juicy bars. And I'm going to help you out here. I'm going to show you what we're going to be in a downtrend, starting at 8:47 a.m. Pacific. Now I'm going to go through the whole rest of the day, and each time that you think you see a mid-band short setup on crude, please type in the letter S. Okay? All right. Reconstructing crude after inventory. Here we go. Okay, there's 849, 852. Okay, we're looking for shorts. S for shorts. When you think you have mid-band short condition present on crude, you type in the letter S. Okay, 853. It's 8:59, coming up on 9 a.m. Pacific. Mid-band shorts on crude. I know 2. Now I'm going pretty fast because if you think about it, I'm showing all these bars in 15 seconds. In reality, is from here where I started to here is actually 15 minutes. So there's plenty of time to observe what's going on here. Okay, trend is down. 907, 916. So what I'm saying is, this is like I'm showing you like 500 times what real time is, right? From here to here was 21 minutes, and I showed it in like 10 seconds. But entries are all valid. Mid-band shorts in the downtrend. Typing in the letter S. All right, there's 9:25, 9:31 a.m. Pacific time. Crude is selling off after inventory. 9:48 a.m. Pacific time. Still Pacific Daylight Savings Time, PDT. We switch in November back to standard time. 9:52, looking for mid-band shorts on crude. Selling off, still selling off. 10:14, 10:15, 10:18. There's 10:30. News bots. If I recall, the drawdown in the inventory was twice expected. It was like 4.2 and expected like 2.6 or 2.4 or something like that. So the initial reaction, if you remember, the shotgun was up, right? Remember the initial reaction to the shotgun was up. So the news bots ran it up, and then very clearly, now they're running it down. Algos are running it down. There's 10:40. Looking for mid-band shorts, typing in the letter S when they are present in this sell-off. Continue on down, there's 10:57, 11 o'clock, 11:09, 11:10, 11:12, 11:19, 11:20, 11:30. Okay, there's 12:50. We're coming into the close of the futures markets at 1:15. We've only got a few minutes left in the trading session. Okay, and there's the close. There's the close right there. All right, so let me put a vertical line where we began the exercise and a vertical line at the close of the trading. So here's 1:15 approximately, and we began this exercise of spotting shorts in the downtrend over here. That's where you began to look at the chart in our real-time reconstruction. So, a question to the team. How many shorts are present now that you see the whole downtrend? How many are here? And how many did you catch? What is the number of mid-band crude shorts in this massive sell-off? I mean, if thing dropped, let's look at the totality of the sell-off was from, let's measure it from here. 57.70-ish, and she didn't bottom until 56. Phew, that's 170 ticks. But how many of them were mid-band shorts? Counting how many? So I'll give you 10 seconds to put a number in, and then I will count them. We will count them together before we wrap this up. Almost out of time. Counting shorts on crude. Okay, we got some numbers coming in. Oh, we got some big numbers coming in. Some little numbers and everything in between. Yeah, today was a good day. After we closed the room, if you stuck around a little bit and traded crude, you could have cleaned up here. I mean, it's amazing how that sell-off respected the mid-band all the way down. Wasn't that amazing? Isn't that amazing? That's just sometimes when crude and gold and ES get in those moods where they just the sell bots are in place. Those in a trend, mid-band trades are money. I'm telling you. All right, time's up. Let's count some shorts. All right, so here was one. We enter into the zone. Here was 2. Gave you a little scalpy. Here's 3. Everybody get those? Where's 4? There's 4 right here, right? Yellow bars, kissing the mid-band, kiss and roll, textbook, right? I don't know how you can miss this one. These sat right on the mid-band itself. I mean, that's just textbook right there. So you got 1, 2, 3, 4, 5, counting mid-band trades. Mid-band only, no minimum criteria. We're only counting mid-bands. And the final one was here, which went into the close you probably would have taken. But it is legitimate. So the correct number was 1, 2, 3, 4, 5, 6. 6 mid-band shorts in the 170 tick sell-off on crude after inventory. You got 6, you were right. Now, let's pick one of these. This one didn't give you much. Here, let's look at some numbers just to get perspective on this. Here you got in, at 40, you got out at, I don't know, you got 10, 12, 15 ticks. Here you got a scalp. Here maybe you got in at, let's use round numbers, 30, and you got in at 10, 20 ticks. That's 2 bones. 2 bones a contract, $10 a tick. Here you got in at, I don't know, 15. You got out at, what is that? I don't know, 80. That's 20, was that 35 ticks? That's $350 trades a contract, $350 a contract. 2 would be twice that. Here, this one, you made good money on this short right here. This is about 10.30. You got short at, I don't know, 90. And you didn't probably get out until all the way down here at 56.12. That was an 80 tick trade right here. That's 8 bones a contract. That was a beautiful trade right there. And then you probably didn't take that one, so we're not going to really count that. There was the double entry here on the short kiss and roll on the mid-band right here, Louis. That's correct. So you had the initial one here. So here was your thrust. Here's your retracement. Kiss and roll just under the mid-band, right? That's the first one. Here now you're thrusting, you're retracing. There's a double kiss and roll here. Thrust retracement, thrust retracement. That was the big leg, the 80 tick leg. And then it's fully half the move right there. 170 ticks, and that was 80 of it. And then this turned out to be a nothing into the close. So, all right, excellent, excellent. Most of you got all those perfect. You called them out when I was showing them, and you got the number correct. Good for you. Gold star. And if you didn't catch some of them, don't worry about it. You can study your charts and pick up this type of trade type all the time. So what we're going to do next on part 2 on Sunday morning, I'm going to stop the recorder. Saturday morning.